Prices were about the same in 1979. 1979, the price of silver, some of y'all are familiar with, went up. Silver and gold went up tremendously. In the summer of 1979, this was going for about $9, and this is going for about $10, about the same price as now. At that time, that nitwit Jimmy Carter was in the White House. The liberals had control of the White House, the U.S. Congress, and the Senate. And they're doing all those great, crazy social schemes, spending money right and left, and terrorizing the business community, thinking about the taxes and inflation that they were going to throw on us. While people were scared for this nonsense going on, in Washington, the Russians invaded Afghanistan, and Jimmy Carter knifed our friend, the Shah of Iran, in the back, and he got replaced by that other nitwit. All right. So what happened was the price of silver and gold, the price of silver went from $9 to $40 an ounce. It went up pretty quick, too. A rapid advance in price. Well, the price of the American silver dollars went up, too. And they went up from $10 to about $36. This thing right here, this 1 ounce of silver, went up 4 or 5 times in value in 6 months. This right here went up, but only went up in value about 3 times. So in survival times, your numismatic coins will go up in value, but not very fast. The gold eagle. Then y'all ever seen an American gold piece, the old $20 gold piece? They're one of the prettiest coins you'll ever see. I really like to look at them. They look very similar. They're shiny like this is the Krugerrand. They're shiny like the Krugerrand too, about the same size. And in the summer of 1979, the Krugerrand was going for about $200 to $250. And then by January of 1980, the Krugerrand went up $800. It went from $200 to $800 and went up in value 4 times. The $20 gold piece at that time was worth around $900, and 6 months later it went up tremendously. It went up to $1,000. Krugerrand went up value 4 times, and the gold piece went up in value 10%. So, rather than put your survival currency in numismatic coins, we'd recommend flat bullion coins. But gold did go up 10%. Baseball cards dropped in half. So if you want to collect something, collect coins because they're pretty. Now, how can you tell on a daily basis what the price is going to be? Of course, nobody knows. A lot of people turn to financial pages and look in the commodity index to see what the price is. I'll tell you what I do to see what the price of silver and gold is. I look at the front page. That's going to tell you a lot more. In times of economic crisis, the value in silver and gold go up tremendously. When Russians invaded Afghanistan, the price of gold went up $5 that day. I remember seeing that. Gold is the barometer of economic uncertainty. When people get scared, they buy silver and gold. Silver is often called the poor man's gold, and I call copper the poor man's silver. And we recommend that you buy silver and gold before the crisis hits. When there's an economic crisis coming, everybody's buying silver and gold as fast as they can, and people that have it, they ain't going to let it go. In the fall of 1979, people were just swarming all over the gold counter and all over the jewelry stores buying silver and gold. Everybody was going to the coin shop, standing in line, trying to buy all they could. The people that had it, they weren't selling it. So the price went up tremendously every day. When people get scared, they go buy. So if you can tell when the economic crisis is going to come, then you buy silver and gold, you come out ahead. But nobody can tell that. We suggest you buy silver and gold now, because when the crisis starts, you can't buy it, it'll be too late. A lot of people say, well, you know, they'll wait till the last minute to buy it. Well, if you got a crystal ball and you can predict the future, don't waste your time on silver and gold market. Go bet on the lottery. If you know the future, You put up $1 and get 17 million back. I mean, this right here, you only get 100 back. So if you predict the future, go to Las Vegas to bet on the Clemson games. You can do better than buying silver and gold. If you can't predict the future, buy as much silver and gold as you can get your hands on now. Also, the question arises is how spendable is a silver coin? After I leave this restaurant here, I can go up to the counter and pay for my supper by flipping a silver coin on the counter. The girl up there will look at that thing, and she'll call the manager over, and he'll look at that thing, and they'll say, "Dude, Jesus, what is this?" They don't know what this stuff is. In 1979, I was giving a talk very similar to this, and a couple of people said that, you can't spend silver and gold, you shouldn't get it, and I didn't know any better, and I said, I guess you're right, I'm just telling you what I've been reading and hearing. But as we're leaving the restaurant, I went up to the counter and flipped my silver coin on the counter. It happened to be the manager there. It was a private restaurant he owned. So he goes and picks up the newspaper, turns to the commodity page and sees what silver is that day, and he takes the silver coin and gives him my change. The same man today probably wouldn't do it. In 1979, people were scared. And Jimmy Carter was an idiot doing some idiot things. And people wanted to buy silver and gold. They read it in the papers, they knew about it, and they traded in silver and gold. Now, people feel comfortable, they have faith in the government, they're not interested in it. In survival times, everybody's going to be in silver and gold. So if you have a coin now, it's not very liquid, but during survival times, this is what people are going to use for currency. If you have this thing, you'll come out ahead, and those that don't have it won't. They'll be having nothing. So the utility of these things depends upon the headlines, what people perceive as a crisis coming up or not coming up. The next thing is, people often ask me, is when's the best time to buy it? And I hear people, so-called experts all the time saying, wait till the price goes down and then buy. Once again, if you got a crystal ball, I'll make 10 cents on the ups and downs of the silver market, and you buy these lottery tickets and make a lot better return on your money. Nobody knows what the price is going to be. But let me tell you what all the experts will tell you. When you buy silver and gold, you practice what's called price averaging. You buy the same amount of silver each month, and don't worry about the price going up and down. You buy one month at $7, the next month you buy silver and it's $6. What's your price? $6.50, that's the average. Well, the average price that you'll pay for your silver and gold will be better than you trying to watch the market going up and down and pick it at the right time, because you can't do it. Psychologically, we as humans are unable to hold off when the price is going up to sell, or to hold off and to buy when it starts going down. We're all jumping at the wrong time. What the people have found out over the years is you buy the same amount of silver every month and don't look at the price going up and down unless there's some crisis. That works best and it comes out real good. The price of silver and gold goes up and down every day in waves. If you keep looking at those waves, you'll get seasick. So we recommend that you buy the same amount each month. The next thing is people talk, what's the long-term value of silver and gold? Everybody says that you shouldn't buy silver and gold because you don't draw interest. Well, let me give you a true story about me buying silver and gold. My brother came to me a number of years ago and told me that I should put my savings in this stuff called gold and cougar ants. I thought that was the dumbest thing I'd ever heard. I said, the guy must be crazy to buy that stuff. You don't draw interest on it. The cougar ants are then going at $45. And I didn't buy any, but I did read the literature he gave me, and I started reading and studying this stuff about silver and gold. And finally I determined that that was a good investment program. Of course, by that time it was going up to $90. I then lost $45. But I read, studied, and got my money up, and finally I decided to go buy me some silver and gold. So I went over there to the coin shop to buy 2 cougar ants. I took with me $120. So I went in there and laid the $120 on the counter, and the man says, too late, Clarkson. The price is now $125 a piece. I said, well, that's all right. I'll wait till it goes back down. Baby, that's not the way you do it. It doesn't work. What happened was, as I waited for it to go back down, the price of Krugerrands went to $135. So finally I said, you know, it's never going back down to 120. I lost my chance, and I should go get some now. So I got me my $270 to buy 2 Krugerrands, went to the same corn shop, laid my money out on the counter, and the guy says, sorry, Clarkson, they're not going for 150. I had the additional money in my pocket, but I didn't bring it out because I was going to wait till the price went back down. Well, guess what? It didn't go back down. So finally I went down there and started buying some Krugerrands at $190. But I could have bought them at $90. I kept waiting for it to go back down. The price goes up and down too much, so you're not able to pick and choose that. So I learned that the hard way, and the story I just told you, it happened to me, but I've heard it told by a bunch of other people. You first get into silver and gold, you're always looking for ups and downs. They don't happen, just go ahead and buy. If it drops, buy some more, then you average out to the lowest price. That's the only way to do it. Now, I did mention about people not wanting to buy silver and gold because it doesn't draw interest. That's true. The silver buried in your backyard doesn't draw interest, but it does appreciate against the dollar. Let me explain that. The value of silver and gold go up and down on a daily basis, up and down, up and down. But on the long run, on the average, increases in value against the dollar. I'm not saying every day, but I'm saying in the course of years, it appreciates a couple of percent a year. Let's say that I have $100 to invest. When I go stick that $100 in the bank, at the end of the year, I make my $5 interest. Well, Uncle Sugar is going to come take $2 of that, and through the tax system. So I only got $3 interest for my money. Well, inflation now is 7%. So with 7% rate of inflation, at the end of the year I may have $103, but it won't buy what $100 did the previous year. Let's say that when I get my $100, instead of putting it in the bank, I go buy me a chainsaw for 100 smacks. And I don't use this thing for a whole year, and I keep it in the box, and then I decided I want to sell it. If I go take my chainsaw to the flea market, I can sell it for $107. I can sell it for what I paid for it, plus the rate of inflation. So if I put money in the bank, I pay taxes, and I come out less than inflation, and I lose money. I may have more. My stock of $1 Federal Reserve notes may be larger, but my purchasing value is smaller, and I lost money. I can't take my $103 and buy the chainsaw. I better come up with some more Federal Reserve notes. If I have any other goods and services, on average it breaks even. But if I put my $100 in silver, at the end of 1 year, I could have gotten back $109 for my silver. I would have made about 2%. If survival times come, then I'm a multi-millionaire, because it can be worth a whole bunch. What's the rate of inflation? What was the rate of inflation in the United States government from 1792, when they first started making the silver dollars, until 1930, when we went off the gold standard? I read this in a history book the other day. The rate of inflation in our country for 150 years, while we were on the silver and gold standard, was what? I read it the other day as 0.002. Since 1933, we went off the gold standard. Of course, our inflation rates are much higher. Inflation is a serious business. If you've got your money in silver and gold, you're in dire shape in survival times. Yeah. John.
The inflation rate of 1933 to 1986 was 930%.
Okay, inflation rate from 1932 to 1986 was 930%. So if you had a $100 bill and you kept it, your spending purchase would be about, spending value would be less than a penny. So if you had your money in long-term bonds, you bought these 100-year railroad bonds, you spent a fortune in railroad bonds, $10,000, At the end of the year, end of the 100 years, you got purchasing power of about $5.